ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
Hot mics.
Welcome to the show. Welcome to the show. Happy Trade War Friday. It seems to be all the news right now. It's in the middle of a trade war. Oh my gosh. You know, people who invest in the stock market, mutual funds and index funds and all that other stuff, if my retirement were solely in that stuff, I don't know how you guys sleep at night. I really don't, because there's so much of your return and this market and all that kind of stuff that there are variables outside your control. Like I can't, if I own some company that's got a significant exposure to what's going on right now in politics. I mean, Amazon's a great example too. I mean, the president of the United States, most powerful man in the world, is on this personal vendetta against Jeff Bezos. And it really has nothing to do with the post office and Amazon. It's got everything to do with what the Washington Post says about the president. And it just blows me away that we continue to invest in stuff that we have no control over. Why would you invest? You're giving your retirement account to a company whose equity value is being dictated by what the executive branch, the leader of the executive branch, the CEO of the executive branch puts out on Twitter. And people tell me, oh, Jason, real estate's risky. I'm like, really? Risky compared to what? I mean, and don't get me wrong, I voted for Donald Trump, but I'll tell you what, I won't let him run my retirement. I mean, it's insane. And when you invest in a company like Amazon, that's exactly what's happening. And I'll tell you what, Tesla's another one of my favorites. I like Elon Musk. The more I read about him, the more he is trolling his investors and his competitors right now. He put a picture up of a box, a torn box that says bankruptcy on it, and it's got like stuff in it, and he's sitting in front of one of his cars, implying that it's all over, guys, time to close up shop and go home. And then the shares plunge like 5%. That's your retirement. That's the level of seriousness these guys are giving to your retirement. Now, you may say, Jason, well, I'm not invested in Tesla. Are you sure? You got a fund manager. Is he invested in Tesla? It's kind of like the Snapchat debacle. Oh, I mean their IPO that came out last year. I get it, guys. It's a real estate show. We will get to the real estate in a minute. I'm setting up the show, and I'm comparing what we're going to talk about in real estate. I'm going to compare it to what you're probably doing in your retirement accounts, your 401k, IRA, all that stuff. So when I look at Snapchat, who bought all that Snapchat a little over a year ago? In fact, I still have the PowerPoint slides when I talked about it at one of our free events. I had to pull up and see how close we are to that price target we talked about. But who bought a bunch of Snapchat? NBC did. NBC Universal. How many of you guys have a mutual fund or something out there that's invested in some of these other companies? And they're invested in this other garbage that they're losing a massive amount of money on. I mean, go to the website Dark Bid, and there's just article after article. My favorite quote on his website, 96% of stocks are utter garbage. 96%. You are lucky if after a lifetime of saving and investing in the stock market, you are lucky if you beat or even meet the stock market's average return. As soon as you take out taxes, and by the way, I hear this all the time. Oh, well, Jason, I can just invest with my IRA and I don't pay any taxes. Well, the companies inside those IRAs do. You do pay tax. You personally may not pay it, but there are taxes being paid inside that IRA. So the purely tax avoidance strategy doesn't necessarily work. It doesn't boost your returns like everyone thinks they do. So here's the reality. How much are you really earning? When you take away inflation, when you take away the management fees and the maintenance fees on this stuff, how much are you really earning? We talked about it in one of these shows. It's like 5%, if you're lucky. I don't know about you. I don't get really excited about 5%. And by the way, you absolutely cannot 100% ever, never build wealth at 5% returns. It doesn't build fast enough. You just can't. You've got to use a little bit of leverage, and you have to have much larger returns to build wealth. It just does not work. Now, at 5%, I mean, is that a decent savings bond? Is that a good, would I do a CD if I'm 80 years old and put $1 million in at 5%? Yeah, I could see doing that. But to build wealth with that, not going to happen. Mathematically, it doesn't happen. Here's another one for you. Most people retire broke. Vast majority of Americans retire broke. This week we got some really awful news about a friend of ours who has gotten a degenerative disease. That's probably the best way to describe it. And he's getting pretty close to retirement. And unfortunately, this will ultimately, not end well for him. We also have another friend of ours. She stays at our house, goes to MD Anderson when she's in town. In her early 30s, that has stage 4 cancer. And she's been fighting this nonsense for 2 years now. So I was in Dallas Saturday night. I got this news about a friend of ours. So I called my wife and I said, hey, just want to let you know this is what's going on. And she was like, oh my gosh, you got to be kidding me. That is absolutely awful. And one of the things you begin to realize, and I could pull the statistics up during the break here. One of the things you realize is that you can be moving along here, saving for retirement, and you don't make it to retirement. Not everybody gets to make it to 65 or 67 and a half or whatever the number is. Not everybody makes it. So why not start building some wealth now to go ahead and start taking some time off to do those things that you've always wanted to do, that you're waiting to do in retirement? You're not guaranteed to have the health in retirement to do those things that you've dreamed about. So you might want to move a little bit quicker to get on the pathway to building wealth. Last night we had our base camp meeting, and we've introduced a new tool to the group. Now, we use inside our house buying company, Houston House Buyers, and inside Tom and I's portfolios, we use some very advanced tools. And we don't just kind of give those out because you've got to have a basic knowledge of real estate. You got to understand some math, investing, that sort of thing. We introduced a new tool last night that we're going to use in our passive investor network, the PIN. And what this tool does is it calculates appreciation of rents and appreciation of the overall value of the house. Now, why is that important? I'll give you a great example. I was up in Dallas, hanging out. Wholesaler came to me and he said, Jason, man, you don't understand. Dallas is like, it's crazy, man. There's just no deals, and people are buying all these deals. And I swear, every city I go and speak in, I hear the same thing. I'm like, I start counting down. I'm like, okay, how many minutes is it going to take before somebody comes up to me and says, you don't understand, this market's so hot, it's so crazy, and people are spending too much money on property and all this nonsense. And he started off his comment with, well, Jason, people are paying too much for property. I said, are they really? I said, are you sure? He said, yeah, man, they're paying too much. According to who? According to you? I said, have you ever thought that maybe you don't have the tools necessary to determine what to pay for these things? And instead of looking at yourself and saying, oh, well, maybe I don't understand the market, you automatically assume everybody's paying too much for stuff. And he looked at me with his blank stare like, what? And he said, what are you talking about? I said, well, how much has the Dallas market appreciated since 2012 on a yearly basis? And he said, I don't know. And I said, you're in real estate and you don't know that. You call yourself an investor and you don't know that. That's a problem. I said, it's 12% a year. And his jaw hit the floor. I said, yeah, if you could simply buy a single-family house, do nothing else with it, and hold on to it for a year, it's worth 12% more the beginning of the next year, 12 months later. Is that useful information to have? And, of course, he said yes. Why is it useful information to have? Well, now I know why people are paying more for these things. At that point, if I had a mic, I want a mic drop, turn around, walk back to the bar to get another adult beverage. We're going to talk about appreciation here on the show, and I want to compare it to multifamily. I want to compare it to what's going on in the stock market right now. It's Jason Bible, Right Path Real Estate.
Mike's off.
Great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time?
Yeah, Andy,
I'm
this
Jennifer
white desk, when you
Hernandez,
get it,
Senior
hit it with the
Loan
camera, it
Officer
does
at
do
Legacy
some strange
Mutual
things.
Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts, Benchmark Insurance Group of Texas, 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
1 minute.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout
I really
the
need
country.
more stuff
Our
on my
unique
desk.
philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com.
All right, we're coming back.
That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
Oh, yeah.
All right, Mr. Bible, hot mics.
Right, welcome back. I'm getting text messages from my buddies. It seems like everybody's watching the Masters today. You'll see somebody's got their laptop set up and they're sitting in like a boardroom. It's tables full of people, big important meeting, and they'll take their camera and sit back a little bit, and they'll take a picture like over their shoulder. You can see like they got the Masters in the window of their laptop, and there's all these people in this meeting. It's pretty funny. This guy's actually a physician. He's sitting in a meeting. He's like, I'm working real hard today, boys. Great Masters. Anybody's watching right now. It's been a ton of fun to watch. But in any case, let me get back to the show here. Let's talk about what's going on in this market. We introduced a tool last night to the folks that are part of our Basecamp group. And what the tool does, it does really two things that are important. One, it looks at what's the value of this property today. And then the second thing is what's the value, or what we call the predicted future value, what we call PFV, in 5 years. Now, why is this important? Because it gives us an idea of what we should pay for this property. Now, what I find so fascinating is when people blindly put their money in the stock market. Yet when they start real estate investing, they'll say, well, I only buy a house based off what it's worth today. Oh, really? Because you're Exxon stock, Google stock, Snapchat, whatever, you're buying, praying it goes up. In fact, it's the only way you make money in the capital markets. I mean, don't get me wrong. There are some stocks that do pay a dividend, but those dividend yields are at historic lows. Real low, because the value of these stocks are so high. So we looked at a deal last night. Little deal that we're working. Actually, my wife's portfolio. And we sat down and calculated what's the appreciation in this market. And you can go back 5 years and do this. There's a whole process that we use to do it that's really simple. I mean, you can make this inordinately complex, but we made it really simple. Like, guys, look at these two things. Boom, put your number in. Or put a number half that size. I don't care. I just want you to account for appreciation somewhere. Appreciation is part of your return as a landlord, as a passive investor. Here's the little ugly truth that no one tells you. Appreciation will be the thing that you make the most money on, bar none. Multifamily, single family, office, all that other stuff. Doesn't matter if it is an asset that is tied to real estate, appreciation will be the biggest part of your return. Why people don't calculate that when making an investment decision, I don't know. In fact, the way I look at it is cash flow, debt pay down, equity at the time of purchase. Those sorts of things are kind of like cherries on the top. I mean, what a sweet deal where you can go in and you can buy something and you're cash flowing 15% per year, and you're also experiencing 7, 8, 9, 10% in appreciation. But let me explain something with appreciation. It's what a lot of people miss. The Houston market right now is appreciating at 7.6%, and it's been that way for about 5 years. So let's call it 7%. Now, when I tell people that, they're like, oh, I mean, 7% appreciation, that's no big deal. I mean, it's only 7%. Well, it's like, hold on there, cowboy. We're using leverage in real estate. That's 7% of the total value of the asset. So if I buy a house and my out-of-pocket is, let's say, $10,000, the house is worth $140,000 when I buy it. Is my $10,000 appreciating, or is it the $140,000 that's the value of the house? And the answer's simple. It's the $140,000. So if that house is appreciating, it's worth $140,000. It's appreciating at 7%. How much is that? It's almost $10,000 a year. If I'm all in on a deal for $10,000 out of pocket, in other words, I got $10,000 of my cash in the deal, and it's appreciating 7% per year, that means in the first year I've made back 100% of my cash, of my investment. That's pretty insane when you think about it. There is no investment. This is why I would just absolutely slam on the Bitcoin crowd. Because they're like, you don't understand, man. I like tripled my money in like 8 months. And I'm like, yeah, and you're going to lose it all in another 10. But if you were spending less time doing nonsense with Bitcoin and more time buying houses like this, you'd actually make real money. That's how I know people are making money. When they tell me they're an investor and they're doing X, Y, and Z, I'm like, great, well, explain the math behind that for me. And they can't. This is why I don't think multifamily is a great investment right now either. Let's really get into the math and see where these returns are coming from. A lot of this stuff is sell at the top of the market and pray it doesn't crash while you own it. But let's go back to this single family deal. I'm buying this house. House is worth $140,000. The max loan I can take out is about $108,000. Out of pocket, $5,000-$6,000 on the deal. It's cash flowing monthly about $436 a month. That's a chunk of change right there. It's cash flowing $436 a month. We've captured about $27,000 in equity. That's a 6X, by the way. We're all in for $5,000, and we're just under $30,000 in equity capture. That's insane. And you're telling me Bitcoin or the equity market or whatever is better. I'm like, you got to sit down and do the math. Cash on cash return for this particular house is 114%. Now, that's insane. What if it were only 15%? I still think that's a great deal. Now let's look at this appreciation piece. This is where things get really interesting. We looked at that neighborhood. Here's what you need to know about appreciation. It's neighborhood specific and it's house specific. Meaning, you can go into a neighborhood, and I'll tell you what, we talk a lot about this at the weekend retreat. And I'm just going to skim over it real quick because I spend about an hour and a half talking about this issue alone. You have different size houses, different styles of houses. You have different bedrooms. You got different bathrooms. You got, numbers of bedrooms, numbers of bathrooms. You got 2 stories. You got 1 stories. All of those houses in a neighborhood appreciate differently. Not only do they appreciate differently, they appreciate differently relative to how many of those are in a single market. So, for example, if I were in a market and I were buying a house or I were looking at a house to buy and it's a 1-car garage and only 10% of the houses in that neighborhood have 1 car, that appreciation schedule is going to be very different than if I were investing in that exact same house in another neighborhood that had 50% of the houses had a 1-car garage. I hope that makes sense to everybody. How to determine appreciation can get inordinately complex quickly. However, here's what we did, just to make the discussion a little bit shorter. I went and looked at the historic appreciation in this neighborhood for this type of house in this section over the last couple of years. We found that rental appreciation is 4.2% per year, meaning rents go up almost 5% a year in this submarket for this house in this neighborhood at this price point. It's very specific how we do it. So about 5%. Then I looked at the appreciation of the actual house. And what we found is over a 2-year period, houses in this submarket appreciated 18% over 2 years. That means it's a 9% per year appreciation. That is absolutely bananas. 9% appreciation. That's not 9% appreciation of what I've got in the deal. That's 9% appreciation of the value of the house at the time I purchase it, which is $140,000. So I want you guys to take a listen to this math, because it's the numbers are going to seem absolutely unreal. We're about $5,000 out of pocket on this deal. After owning it for 5 years, my cash flow will increase from $436 a month to $535 a month. My cash flow is increased by 25% per month. My annual cash flow is over $6,000.
1 minute.
Now, that's just rental appreciation. Let's talk about the appreciating value of the house. If that house is appreciating 9% a year, that's a compound annual growth rate, meaning it's $140,000 times 0.9. Let's call it 10% to make the math easy. That's $14,000. So now next year it's worth $154,000. It appreciates another 9 to 10% that year. So 10% of $154,000 is $15,400. So now it's worth $169 and some change. At the end of 5 years, this house, we will have captured nearly 2,300% equity. We get back from the break, I'm going to go more through this math. It's Jason Bible, Right Path Real Estate.
Mike's off.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
This is Business 1110.
All right, Jay, hot mic.
All right. Welcome back. Jason Bible. Right Path Real Estate. Working on some numbers here. You know, it's amazing to me that the discussion is as compared to what? I have alternatives in the investing world. We prefer to do it with real estate. I'm redoing this, my chart here. If I paid 80% loan to value, meaning I was in for 80%, how much out of pocket would I have? How much equity would I capture? Because I hear all the time, real estate investors are paying too much for property. And I'm like, really? If you're sitting on 9% a year appreciation, 10% a year, 12% a year, are you really paying too much? I just redid this deal. Cash out of pocket, $23,000. Cost you $23,000 to get into the deal. The house will cash flow $376 per month. That's a 20% cash on cash return. You're making 20% on your cash. Remember, that's only one of the 5 elements we use to calculate return. You're making 20% on your money day one. Well, when there's a tenant in there. 20% rate of return. You're $23,000 in, you're making $4,500 out. Now, you're not capturing a whole ton of equity. A lot of people calculate equity capture incorrectly. They'll look at what's my loan payoff minus what I can sell it for. That's not how much equity you capture. You need to do loan payoff plus any cash you've got in the deal less your equity. So equity capture on this property, you only capturing $5,000 in equity. That's it, $5,000. But it is cash flowing $4,500 a year. Here's the thing. What happens when you put rent appreciation and the value of the house appreciation into the calculator? We're going to use 4% for rents, 9% for the property. Your cash invested out of pocket's the same. Your rent goes from $376 a month in cash flow to $462 a month. So your cash flow is up to $5,500 a year. You're cash flowing $1,000 more a year. Here's the interesting thing. That 9% appreciation, when you go to sell that house, net of everything, you'll put $89,000 in your pocket. Let me say that again. You go from $4,700 in equity with a 9% appreciation per year after 5 years, you will sell that house and put $89,000 in your pocket. And you guys think I know everyone's out there. There's no way. That doesn't make any sense. I'll give you a great example of this. We had a property on Wood Oak. If y'all want to look it up, for those of you who have MLS access, 7470 Wood Oak. This is a great, I use this example at the weekend retreat. We stupidly, and I use that in all of its context, sold that property, I want to say it was 2 years ago. May have been 3 at this point. We sold that house for $119,000 as a flip. Houses in that neighborhood are selling unrehabbed for $165,000. Yeah, you heard me right. That house went from $120,000 to $165,000 inside of 3 years. In fact, here's the really painful part. We were all in on that house for like $78,000. Let's call it 80. We had no money in the deal. The bank lent us everything. I had no cash in it. $80,000. We flipped it, made $20,000. If I had held on to that property and sold it this year, I would have made $80,000. And I would have had no money in the deal. What's my rate of return? Infinite. Guys running around the country right now teaching flipping $1 million homes to make $100,000. It doesn't have to be that hard. It's literally find the right neighborhood, find the right house in that neighborhood, buy it and rent it and sit on it. But Jason, houses are priced too high and there's going to be a crash. Really? How? How exactly is this single family market going to crash? If you really honestly believe there is a market crash coming, you need to read the book by Aaron Clarey, Behind the Housing Crash. It is the best book I've read that talks about all of the reasons why the market crashed. He was a credit analyst for a bank for 20 years in the middle of all that. One of the few guys that predicted the crash was coming. Ultimately, that's what he got him fired at the bank. He was doing a lot of work with developers. There is not a real estate, unless Hurricane Harvey, that's the only thing I don't know yet. What's going to happen when all these houses hit the market from Harvey? But I'll tell you what, you think there's a real estate crash coming? I will tell you are absolutely wrong. Now, multifamily, I can certainly make that argument. Single family, no way. I think there's 50,000 people a year moving to Harris County. It's almost 5,000 a month. And they need a place to live. We only sell on HAR, often on MLS. Our number, we think there's about 120,000 houses that get sold in a year in the greater Houston market. Where are all those people going? They're moving into apartments. A lot of them are buying houses. And where are they buying houses? They buy $1 million houses? No. They're buying $75,000 houses? No. They're buying houses just below the median home price. That's where a lot of the action's at. That's where the action's been at for the last 10 years. You want to make $100,000 on a piece of property, just buy and hold on to it for 5 to 7 years. I have done this for the last month. I'm going to do it at every single event I speak at. I'm speaking at one this Thursday. If you guys in the Sugar Land, Katy area, I've just started a RIA down there, Real Estate Investment Club. Our first meeting is Thursday at the Flying Saucer, the Loon Room in the back of the room there. I will tell you, get there early. We've only got room for about 40 people. But it's really for Sugar Land and Katy investors there in Southwest Harrison and Fort Bend. But I'm going to ask the room full of folks, hey, how many of y'all been real estate investors since 2011, 2012? And there'll be a handful of guys in the room say, yeah, I've been buying since then. Have those houses doubled? How many of you, raise your hand if your house has doubled in value since you bought it in 2011? And I'm willing to bet just about all of them raise their hand and go, yeah, they come to think of it, they have doubled in value. And I can tell you that trend is not going to cease anytime soon. So you've got a choice. You can continue to invest in the Twitters and Teslas and Amazon and Microsoft and whatever company out there that everybody's investing in. And oh my gosh, I could earn a 50% rate. Jason, you understand, I'm in Bitcoin. I made a 100% rate of return. And I'm like, yeah. And I'm looking at this deal right here now that I'm $23,000 out of pocket. I own it for 5 years, and I capture $89,000 in equity when I sell it. By the way, that's a 280% rate of return. 280%. Plus, I get the tax benefits. Plus, I get the cash flow. I mean, it's like you're telling me that all this other stuff out there is a way better investment. I'm like, let me know how it works out. But here's what I can tell you. I've been in this business now for July 4th will be 5 years. And I only have one regret every year, and that's how do I buy more houses? That's really what it comes down to. How do we buy more houses? How do we buy more of them? How do we buy them faster?
2 minutes.
When are we moving to get into Dallas and Austin and San Antonio? I mean, literally, that's the discussion we have around the office. How do we buy more? How do we buy faster? I don't think this stuff is going to end anytime soon. It's just not. Here's why, guys. You can't afford to build a new house anymore for anything under anywhere near $200,000 bucks. Let me put it that way. Sure, there are. You go into HAR and you search for new houses sold below 200 grand. There's a handful of them. But there are no developers that I know of that are going in and buying up acres and acres of land and going in and doing a bunch of new construction. It's just not profitable for them. So that tells me there's no new supply of affordable housing that is coming on the market in Houston, Texas anymore. Dallas, you're in the same boat. Austin, you've been there for like 5 years. San Antonio's a little bit different game, but Dallas, Fort Worth, greater Houston market, no one's building affordable homes anymore. You can't.
1 minute.
In fact, the only affordable home you can, quote, buy new anymore is a mobile home. That's it. There are no new construction, virtually no new construction for brand new homes. This market is going to continue to appreciate. It is not going to stop. There are too many jobs coming, too many jobs in Houston. The recession for Houston is over. Heck, if the country goes into a recession, that's great for Houston because we're countercyclical. This is the market to be in. Dallas-Fort Worth is a great market to be in. These houses will double in value in the next 7 to 10 years. And if you're using leverage, you're going to make a ridiculous amount of money. We get back from the break. We'll talk more about leverage returns. Might even talk a little bit about taxes. I might actually get to that at some point today. It's Jason Bible, Right Path Real Estate.
Mic's off.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation.
Oh, Trace, there is a great article. Let me see if I can find it.
Owner-occupied properties. Each of our files.
Because you are absolutely right.
Engineer. Remember to check before ever repair.
Oh no, did I not save it?
702.
Oh, here it is.
3825. That's 346-702-3825. or you can reach us online at foundationcheck.com. That's foundationcheck.com.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating.
Trace, there's a link in that article I just posted. Pull up the Permian Basin market area in that link, and it'll tell you how much rents have appreciated in that submarket. Now, this is just for multifamily. But for all the guys that were spending all this time and money investing in Houston, they really missed the boat big time. They should have been in those smaller markets for the last 5 years.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, Jay, hot mics.
So nice when you play this song. This is great. Welcome back. Jason Bile, Right Path Real Estate. Got a note during the break. Hey, Jason, multifamily, or he said rents in the Permian Basin have gone absolute bananas. And I said, you're absolutely right. There's an article that came out this week. I posted on the Facebook feed about multifamily rents. And I'll tell you what, the multifamily gurus in Texas really screwed up. They really missed the boat. I was at I'm doing battle right now with a couple of guys as it relates to my comments on multifamily. About 2 years ago, my wife was she had a high school reunion. And I went up there and we were doing like this Topgolf thing and they were going somewhere else or whatever. So we just started chatting with a couple of folks that were there and chatting with this lady. And she had said, multifamily, she worked at a very large regional bank. I'll just put it that way to protect the innocent here. And this was 2 years ago. And she said, hey, Jason, you're real estate? Yeah, I'm real estate. What do you do? Oh, I'm a commercial banker. I was like, oh, well, what do you do? Because typically commercial banks and on the commercial banking side, they all have a specialty. She said, well, you're going to love this. She said, up until last year, the biggest portion of our new loan portfolio was multifamily. She said it was like 90% of what they were doing was multifamily. And I said, well, what happened? She said, we think Texas is way overbought. I said, well, I'm sure if like someone brings you a really good deal, y'all look at it. She goes, no. She said, we just don't think, we pulled out. We're done. We're done funding multifamily deals right now. We're just not going to we're not going to invest in these deals because we think the market is way too hot. Way too hot. Here's what I'll tell you. Multifamily investors in Houston, Dallas, Fort Worth, San Antonio, and Austin really missed the boat. This article I posted talks about the rent increases in the smaller markets. These are like Permian Basin's a good example. These are the Midland, Texas. They're having 20, 30, 40% rent increases year over year. If you're a multifamily investor and you spend all your time on multifamily in this market, you really, really missed out. The real market was in these smaller submarkets, which makes sense because there's virtually no value left in these bigger markets anymore. In fact, rent is flat year over year, which is bad for multifamily guys. A lot of the PPMs I looked at over the years predicated 5, 10, in some cases 15% year over year rent increases. That's not happening. In fact, here's what happens. The reason rents go flat is because demand is flat. Now, could it go back up? Absolutely. But I've said since Hurricane Harvey bailed out multifamily investors in a big way. But 2018 into 2019 might be the year of reckoning for multifamily. If those prices are flat, that means at some point they're going to end up edging downward. And how do I know when lease rates are edging downward? Real simple. They start giving away what's called concessions. That's the sign flippers you see out in Westheimer. It'd say 2 months free for, a 12-month lease. So in any case, guys, we think single family is a great place to invest. We've got a whole ton of events. Oh, we got our bus tour this weekend. If bus tour tickets are not sold out, you can go to Right Path Real Estate, sign up there. It's like $150.
10 seconds.
You get to meet with Tom and everybody else. We've got a number of events coming up next week. Go to rightpathrealestate.com. You can sign up there, and I will see you guys then. Thanks for listening. I'll be here Monday morning, 9 a.m., bright-eyed, bushy-tailed. It's Jason Bible, Right Path Real Estate.
All right, Jay, have a good one.
All right, thanks.
You've been listening to Right Path Real Estate Radio. Find Jason and Tom at rightpathrealestate.com.
Let me tell you a little secret. You're getting fake electric bills. Stop being an energy